We're now going to head over to Stan Shamu, who's standing by at IG in Melbourne to get his take on what we should be looking at from the local market today. Stan, thanks so much for your time. Looks like we could see a bit of a recovery after yesterday's 2% loss. Did we oversell and overreact yesterday?
Yeah, well, it certainly seems like calmer heads prevailed through US trade. Of course, European markets got off to a pretty poor start, but we soon saw them erase some of those losses. And although they still finished a bit lower, they certainly didn't finish as low as what we did yesterday, with US markets down about 0.5%. We can only assume that this will be a fairly positive lead for our market, which is down over 2% yesterday. We're actually calling the market up 0.5% today to about that 5043 level, so that certainly will see us recuperate some of the losses from yesterday. Of course, most investors will be focused on trying to get back into some of these positions that they probably got stopped out of yesterday. Of course, with markets trending higher, generally traders move their stop losses in line with the market and try and lock in some gains. So probably today we'll see some of these higher end targets for investors like the banks, for example, which were sharply sold off yesterday, and they'll probably be trying to get back into these. Of course, we might see some hoping for a bit of a deeper pullback before getting back in, but of course, with the way the market's been going, it's really hard to just stand on the sidelines and wait for a deep pullback, which might not actually eventuate. Of course, we probably won't see as good a reaction in the resource names. Commodities struggled quite a lot overnight, particularly the likes of copper. Gold managed to show some strong signs, helped by some safe haven plays with the whole European situation seemingly kicking off. So we might see the gold stocks outperform, but just looking at the iron ore space, BHP is looking at a 0.4% drop to around 34.57. So it certainly seems like most of the resources will be under pressure, while some of the banks and some of the other yield players will probably see some buyers kick in as they chase the price action after the sharp losses yesterday.
Okay, I also want to ask you why those losses overnight were more moderate compared to what we saw in the Asian session yesterday.
Yeah, no, absolutely. Of course, when we got off to the Asian session start yesterday, that Cyprus issue was just gaining momentum, with a lot of talk that would see taxes for deposits over 100,000 euro for around 9.99% and below 100,000 euro for about 6.75%. But this has certainly been moderated, and some are now speculating that this delay in the parliament vote suggests that they might be looking at their options here, particularly for people with less than 100,000 euro. They might certainly look to drop this quite significantly lower, while trying to raise the one for deposits over 100,000 euros. So this seems to be the story that's doing the rounds at the moment. But Cyprus banks will certainly remain closed, with some saying they might even be closed on the 20th of March as well, which is tomorrow. So that probably will be the development to look out for, whether or not they will change that percentage on the deposits less than 100,000 euro. Of course, they're not quite as I suppose hefty as the ones for over 100,000 euro, which obviously have a little bit more money than the other. But yeah, that really helped support markets, and some are now actually talking about a yes vote being a bit of a positive for markets at the moment. So no one really knows how it's going to be interpreted, but at the moment it seems like there's a little bit more optimism than pessimism that we saw yesterday.
Okay, Stan Shamu, thanks so much.
Cheers, Kate.
Well, as we mentioned there, US markets initially reacted badly to the news out of Cyprus, but pared back those losses to end the session down only about 0.5%. So did Asian markets overreact to the news, or was Wall Street